I'm not even gonna say look at Snapchat. I mean, Snapchat, I mean, listen, I'm just the greatest trader of all time. I tried to tell people, nobody listened, whenever I get off Snapchat a couple days ago, and everybody kinda hated on me for it, and look at Snapchat. It's almost to $10 a share. On my remaining bid, my entry 760s, we're up to 970s right now. So yeah, we are up like 25% in this position and loving life in it. Hopefully it continues up. Today we have Google earnings. Alphabet Google earnings today, guys. Let me know what you guys think. But yeah, you love to see it. I'm certainly proud of that trade. We talked about it a lot here, and yeah, you know, shout out to Snapchat. Snapchat is just doing things. Look at Google absolutely flying up today. We do have the earnings report and call today. We are going to be streaming that live as we always do right here. So y'all be ready for that. And yeah, let me know what you guys think. As we always do here, we're going to get ready, get a poll ready here. And so the first poll we got going on today. So Apple and Microsoft have earnings today. Snapchat doesn't have earnings. Snapchat had earnings a few days ago. We bought the dip from that. Um, Beautiful day for me in the stock market. Beautiful day. Again, we're going to do a poll, bullish or bearish, on the Google Alphabet earnings report and call. There's the poll. Vote on the poll right now. Apple is Thursday, so we don't have Apple today. Today we have Microsoft and Google. All right, guys, getting a little bit of a pullback. Man, SPY is flying up today. Snapchat up to almost $10 a share here. I'm not sure about Google. Yeah, I guess I won't have to hold it for 10 years. Like I said, it feels really good, A lot of haters on Snapchat, bro. I don't know how, like, if anybody was here that day, uh, you guys know how many people were hating on that trade. you know, and so feels good, man. Feels good. Let's let it continue. You know. See if we can keep it up. Again, Google flying up. Big day for earnings. Again, vote on that poll. We're also going to do our Twitter poll, as we always do. Calls or puts. All right, guys, Google breaking highs again at 105 almost, right around 104.90s here. Y'all do me a favor, hit that subscribe button, hit the like button as well while we're here if you haven't already. We certainly appreciate it. GOOG all the way up to 105s essentially. SPY running up. And we also have Microsoft earnings today. Here's the poll. Vote on this Twitter poll that we just posted. If you haven't already, we appreciate it. There's the Twitter poll. And today's not Apple. Today is Google. I'm sorry, and Microsoft. My afternoon's going okay. What's up, Mate? Let me know if I'm pronouncing that right. Greetings from Slovakia. I hope you all are doing well. Hey, thank you, man. We hope you're doing well also. Thank you very much. Why did the markets pump today? There could be a few different reasons. Let's look a little bit deeper. The U.S. sold $42 billion of two-year notes at 4.46%, tails 1.2 basis points. That started at 12, which looks to be right around when the market started to run here. And so, again, it looks like they're running because the U.S. is selling $42 billion of two-year notes at 4.46%. And so, again, the whole reason, just to put this into perspective, the whole reason they sell bonds is because by doing so, it helps the bank raise interest rates, essentially. So it helps interest rates go up, and this is essentially what is causing this bullish response in markets. We got SPY up there, again, just flying up today. Here's Microsoft. It drops earnings today as well. Google at 104.90s, 104.90s. Oh, man, I've been nauseous for days, bro. Oh, wait, hold on. Gotta turn the fan on here a little bit, you know? All right, but yeah, guys, markets flying up again. Snapchat here, man, just a beautiful gain. I don't know. I guess I'm gonna sell most of the Snapchat position here, as we wanted to. So we're selling a little bit of our Snapchat position. Yeah, just took a load off of this. Sold most of the rest, and again, so our Snapchat trade was from about 780s. 780s to $8 and something cents all the way up to 970. So we just cut most of our Snapchat trade. Hey, what's up, Patrick? I bought Snap yesterday. Great return in it today. All right, guys, Google up to 105s. 105s. Can y'all hear that? Fed hike, but it's already in the price. No, yeah, it could be baked into it to a certain extent. That's certainly, could be going on. Dollar index hovering. Yeah, I'm sure the dollar index is probably tanking right now, right? Yeah, dollar index just free falling today, which is great. This is what we want. I mean, the market is up so much. Uh, all right. All right, but again, Google earnings today, which are huge. Snap, yeah. Hey, look at Snap. Yes, we hear the knocking. Sounds like you're getting it in. All right, well, here, let me turn this off. My bad. All right, problem solved. I don't know my diagnosis yet. So Carol's actually going to have to hold down part of the stream today because I'm doing a televisit with my heart doctor. I'm a little bit nervous because earlier they essentially moved up my appointment, and while I would normally be happy that I get my results earlier, usually they move up your appointment to if something's wrong. And so I'm kind of nervous about it. Hopefully I'm fine, but yeah, I'm a little bit nervous because they did move up my appointment, which, I don't know if I'm just reading too much into it. Maybe I am, but yeah, they did move up my appointment, unfortunately. So but how about Snapchat, man? I mean, we're still holding a piece of it. Disney finally pulling back. Maybe I should have held on to Disney a little bit more. I mean, we're up so much already. I was telling Carol about it. I might need to start putting some real money. Like, I have this $30,000 account that I just got to sit on, and it might be time for me to start to put some real money, into swing trading. I've just been profitable enough to where I think I kind of could, um, put some real money behind my swing trades. I'm trying to think of like the whole list. Like, this is all my swing trades. I'm trying to think of all my swing trades over the past like 3 or 4 months, right? I know I've traded Snapchat 2 or 3 times on a swing trade. I've been green every single Snapchat swing trade I've had over the last 2 or 3 months. I've done it with Disney. I've swing traded Disney multiple times as well. Probably I would say at least 3 or 4 Disney swing trades, and I've made money every single time on Disney as well. Now I have swing traded Intel, and I lost a couple hundred on Intel. That's one. And then I'm trying to think of the other ones I lost on. I don't think I lost on any. I got out of Apple green. It was only a slight green, but it was green. And so I think I've made money on every one of my swing trades, which is about like 8. I think 8 swing trades over the last 3 months, give or take. And I was green on all of them except for one, I believe, which was Intel. I'm not 100% sure. I'll have to go back and check the tape on everything, but I'm pretty sure that's what happened. Report drops at 4 p.m. Eastern Standard Time. Yeah, thank you guys. Hey, I appreciate it. Yeah, I'm sure everything's fine. Yeah, Bitcoin's probably flying up because the market's flying up. The dollar index is falling. The reason Bitcoin flies when the dollar index falls is because, okay, so basically, the more the dollar is worth, the more the dollar is gaining value, the more bullish the dollar is, the less people want to take their cash and put it into other things like Bitcoin or stocks or bonds or whatever. And so the stronger the dollar, the more the dollar is gaining value, the less people want to get rid of it, basically. The less people want to buy other stuff with it. When the dollar is losing value, like it is today, people don't really necessarily want to sit on that because their cash is losing value as time goes on. And so what do is they take it and they stick it into other things like Bitcoin, like other cryptocurrencies, like stocks, equities, bonds, whatever. And so there's an inverse relationship there a lot of the time. On average, it's about a 60 to 70% negative correlation you get from the US dollar, the dollar index with other stocks and securities, basically. Wait, did Microsoft surprise drop? No, Microsoft didn't drop. Did they? I'm not late, am I? Are you giving the predictions, Josh? Oh wait, this is quarter one earnings. Let me make sure I got this right. Google. Google's quarter three. Microsoft is quarter one. Still nothing yet. They drop at 5:30 p.m. is the conference call for Microsoft. Google conference call is at 5 p.m. Google pull it back a little bit. It's at 105. Dollar index is at 110.80s right now, or give or take. But we got some big earnings. I think maybe tomorrow is Meta. All right, guys. We got 105 for Google here. 105 for Google. Those are expected numbers. Okay, gotcha. Yeah, so expectational numbers for Google are 125 EPS over 71.03 billion in revenue. Microsoft 50.08 billion in sales revenue over 229 EPS. That is essentially what we got going on. We also have Visa, Spotify, Texas Instruments, Skechers, Chipotle, Mattel, Boyd Gaming, Matador Resources, Teradyne Inc., Encore, a few other larger companies. But yeah, big ones today, Google and Microsoft. And yeah, we got 15 minutes here. And so hopefully we get some favorable stuff. Yeah, here's Microsoft right there. There's the dollar index. Here's Microsoft. Microsoft is currently at 250s. 250s. So y'all check that out. Microsoft pulling back a little bit. Again, just such a big rip today that this is mostly, probably somebody said profit taking from, just such a strong move today. Can y'all hear the music? You should be able to. Okay, good guys. The music's good. All right, guys. So yeah, Bitcoin flying up today, which is again kind of what we want here. We're gonna get ready to send our newsletter out, and again, join our newsletter, completely free newsletter. Hey, thank you, Joshua. Yeah, man. Like I said, Joshua knows, man. He's been following them. My swing trades have been pretty on point, man. It feels even better because with so much hate that I got about my swing trade on Snapchat when I bought it up at $8. People were like, "What are you doing, bro?" They said morons and all this crazy stuff, man. And again, it just kind of shows, the people who are the loudest criticizing other people's trades are usually the worst traders out there. And so feels good, man. Feels really good. Hopefully we can keep it up. But yeah, feels good. Getting ready to send our newsletter here. Let me make sure I posted it in chat so you guys can check it. Yeah, you guys become a member. Nah, Snap was great. Just had to be a little more patient. I'm still holding Snap. Like I held it mostly through today. I still got a couple shares. My entry on Snap was 760s. I started unloading a lot of it at like $9, but I mean, I'm still holding a piece. I took a little bit off this morning as well. So really easy swing trade. Only took a couple days to really get in my favor there. And so, yeah. But sheesh, man, I'm nauseous, dude. And I have my heart doctor appointment. Ugh. What my theory on why I'm nauseous is because I went to the heart doctor, basically. And, the heart doctor scared me. And so I've been, one of those days I took 2 aspirin, right? I think because I took 2 aspirin, maybe I'm getting a whatchamacallit in my stomach is my theory on why I'm nauseous. Hopefully that's not the case. Jack said he was nauseous this morning too. And so, hopefully that's all it is. You know what I mean? Google trying to pop up. It's at 105s. Man, what is going on? There we go. All right, guys. Google pull it back a little bit. We got 10 minutes before the opening or the closing bell here today. Big dip here. Again, this is mostly profit taking. People are trying to get flat before the closing bell. That's all I'm assuming this is. I wouldn't really, worry too much about this. Again, let me know what your prediction is for earnings here today. Again, let me know what your prediction for these earnings are today. Hopefully we get some favorable stuff. We're sending our newsletter out now as we do here. Oh, we got a spammer in chat. Okay. Good day to you, sir. There we go. All right, guys. Microsoft starting to move up. We're at 250.40s here. Yeah, but I've been nauseous for the last day and a half, and so unless I'm just having a continuous attack, which is unlikely, I think I'm okay. You know what I mean? I appreciate the advice, though. At least I don't think it's that. Again, I think I'm just nervous. My son was nauseous this morning too, so I'm pretty sure either we got a bug or we got food poisoning of some sort. Hopefully. All right, we're sending out our newsletter. Look at Microsoft pop up ahead of the close. So, again, getting a little bit of a dip here. Straight up again, man. Hey, man. Yeah, it could be acid reflux for sure. Yeah, it could be stomach flu. Yeah, I have acid reflux. Carol's bringing me some type of carbonated drink. All right, guys, we got 8 minutes. 8 minutes. Again, looking at our polls here, we got 44.8%. So basically 45% of people think that are voting for calls on Twitter. 41% are voting for puts, and then about 14% are going to wait till after earnings. I'm kind of in the group where we're waiting for after earnings. Google pulling back a little bit now. Let me know if you guys think we're going to bounce or pop. Google earnings are actually scheduled to drop right at 4:05 p.m. along with Microsoft. So they're both scheduled for the exact same time. Right at 4:05 p.m. Yeah, 104. No offense to you, Bjorn, but I get so many people that say I told you so. No matter where the market goes up, down, people say I told you so. Market goes down, people say I told you so. Like, look, I'm not knocking anybody, but it's so hard for me to vet whether somebody here actually predicts the market. You know, it's so hard for me to gauge it. We got so many people saying so many different things. You know, and so again, half of them are trying to sell their own stuff to people. So it's just kind of like after a while, you learn to tune out of it. I'm not knocking you, Bjorn, or anything like that, brother. I'm just, if you did, nice work, bro. Nice work. AMC pull it back. It's at 670s. Disney at 104.40s. Snapchat finally pull it back. Again, we mostly scared out of it, though. Did you end up buying World Series tickets? No, not yet. I'm too nauseous right now, man. I don't want to get sick. My daughter has the flu right now. And so and so I don't know. I'm probably just going to skip it and watch it from home. I think we'll win the World Series. And I'll probably be a little bit bummed out if we do, if I miss the World Series, but it's all good. Yeah, we'll play the full earnings call as well. So you'll be able to listen to the entire earnings call as soon as the earnings drop in 5 minutes. We'll cover that also. So yeah, we'll be able to hear it all. No. I'm not. I'm getting my earnings. I'm getting the earnings report in a bunch of different sources. Really, I put like 2 or 3 different sources up, and I just kind of see which one refreshes first. Again, they're scheduled to drop exactly in 10 minutes. Hey, what's up, Pampoo? I'm doing all right, man. Like I said, today, right at 4:20 market time, I gotta do a doctor's appointment. So Carol's gonna hold it down in that transitionary period. And I'm gonna try to teach her how to read this stuff, but yeah, Carol's gonna be here holding it down. Phillies, man. I mean, they're all right. I just don't think they're that good. Maybe I'm wrong. I think that was the mistake the Yankees made. All right, Google dipping down to 104, starting to pull back some. '90s. Yeah, I'm in Texas, bro. Twitter trending. All right, guys, we're gonna dip here again. Numbers coming out in about 4 minutes. Let me see where Carol's at. I'll be right back, but the numbers should be dropping pretty soon. Y'all be ready. We're gonna put it in sub only mode as we always do as well for the numbers drop. So announce yourself, show us you're subscribed. We certainly appreciate the love and support, guys. Announce yourself, show us that you're subbed. And yeah, show us that you're subscribed, guys. We appreciate you all. Hey, where are you?
I'm getting around, baby.
All right, baby. The earnings drop in 3 minutes. Like, all right, so I think Carol's going to miss the earnings report. That's okay. The earnings actually don't drop until 4:05, just to put it into perspective, guys. So the earnings don't actually come out until 4:05 p.m. Eastern Standard Time. Hey, what's up, Arisha? Hey, thank you, guys. Appreciate the love. Hey, shout out to everybody that's subscribed. Yassi, Meso, Sirs, SJ, Liliana, Fish, Sir Sticky, Eddie. Hey, thank you, my guys and girls and ladies and gentlemen. Come on, Google, hey, let's see, green or red, guys, green or red. Let me know what you think Google's going to do. Already a really green day, though, and I think this is going to influence it to a certain extent because I think we're already pretty green on the day. So I think we're already pretty green on the day, and I think because of that, we might have some good action. Hopefully we do. I guess I'm bullish. I was bullish this morning before the earnings were actually released. At this point in time, though, the market is just up so much. I think there might be some negative extension on the downside. I think we might be extended on the upside, and we might have some pressure on the downside at this point in time. Now, I hope it goes up, but again, I really don't know. Again, we're up so much from the government's bond buys. Hey, thank you, Ali B. Thank you, brother. I appreciate you, man. But yeah, just from the government's bond, I think they sold bonds actually, which is the whole point is to raise interest rate. Yeah, they sold 42 billion US 2-year notes. So yeah, they're trying to raise rates. That's causing some optimistic signs across all markets, including Bitcoin, Disney, Snapchat, AMC even is moving up today. And so in that regard, that's kind of what's going on. Again, we got about 10 seconds before the 4 p.m. closing bell. The earnings are actually scheduled to drop at 4:05. I'm not sure how, on track they're going to follow these. But again, we appreciate the love. The earnings report is going to be live at 5 p.m. Eastern Standard Time. 5 p.m. Eastern Standard Time. So there's the closing bell. Waiting for the earnings to actually come out, guys. So we're waiting for the earnings to actually drop here. Nothing out yet. Earnings are supposed to just come out. Again, they're scheduled to come out at 4:05. Looking at Google here on the right. Not much of a reaction yet. So I don't think they're actually out yet. We'll see. Yeah, we're going to cover Microsoft earnings as well. We're covering both. We're covering Microsoft. We're covering Google. We're covering all the stuff that happens from those earnings. We're covering everything else too. So there's a big movement on Microsoft's part. So Microsoft is getting some big candles here. I don't know if they're big enough to be from the actual earnings report being released yet. All right, Microsoft just dropped. Microsoft posted first quarter EPS of 235. That is better than the 229 estimates. 235 for Microsoft, better than the 229 estimates. Revenue of 50.1 billion, which is better than expected. So Microsoft posted better than expected numbers. I'm not sure why they're dropping. They posted better than expected EPS at 235, better than the 138 estimates. Google looks like it's out. I don't see anything for Google yet. Not seeing any influence from this yet. Maybe people are front loading here. But I don't think the number's actually out for Google yet. We're looking. Bear with us. All right, again, here is the Microsoft numbers. We're waiting for Google here. I don't see the Google. These might just be me reacting to Microsoft. But I don't see the Google numbers actually out yet. Here's the Microsoft numbers. Again, there is Microsoft. Google looks like it's out. Somebody knows something about Google, but they're not actually showing up refreshing on my screen yet. So bear with me here. We're going to drop Google's pretty soon as we get them. I don't see anything yet for Google, though. Again, it could be just sympathy from Microsoft's movement, which is what it looks like. Microsoft starting to rebound here. Nothing out for Google yet, though. Again, nothing out for Google. Microsoft numbers. Microsoft beat on both metrics. Beat on EPS, beat on sales revenue. Google has not dropped anything yet. Hey, baby. You want to pull that over here, maybe. All right, guys. Google's dropping. There's Google. Google just dropped EPS of 106. Sales revenue of 13.91 billion net sales revenue. So again, 106 better than worse than expected. 106 for Google, much worse than expected here. Much worse than expected for Google. 106 EPS, worse than the 125 estimates. And so again, Google just dropped worse than expected numbers here. Google dropped worse than expected numbers. They dropped 106. Again, worse than the 125 estimates. Net revenue of 13.91 billion, which was much worse than the 71 billion estimates here. So again, Google came in noticeably worse than expected. Waiting for the update, but yeah, we're noticeably worse than expected here. Again, third quarter EPS of 106. Expectations were 125s. 125. So noticeably worse than expected for Google.
Did you want me to get you one of these coffee things right here?
No, I'm good. I'm nauseous. You know, really, I just kind of want some water.
You want to grab your water?
Yeah, can you grab me a water? All right, guys. But yeah, Google came in worse than expected here. Again, Google came in worse than expected. What I'm showing up for Google right now, they're still kind of loading. But again, I'm showing EPS of 106, worse than the 125 estimates. Third quarter net revenue of 13.91 billion. Revenue of 69 billion is what it was. So again, Google showed 106 EPS for the third quarter and 69.09 billion in sales revenue. So again, worse than expected on both metrics. They expected 70.98. They ended up showing 69 point something. And then EPS, they expected 125, and they ended up only showing 106. So again, Google came in worse than expected. It looks like Microsoft came in better than expected, but maybe Google's dragging this down here. And again, here is the Alphabet earnings report numbers. We'll put them up on screen so you guys can see them here. Again, there is the Google and Alphabet numbers on screen. Yeah, everything's going to tank on this. I mean, this is a big influence and this is going to influence markets for sure. Again, we got a lot of other revenue showing up here, but yeah, this is going to influence markets for sure. Google dropping down to 98.30s here. All right, guys, big drops here, big drops. $98 a share for Google, $98 a share. Again, worse than expected. We'll try to put everything up on screen for Microsoft and Google here. We'll try to put everything up on the screen, but again, worse than expected numbers. Third quarter sales revenue of 69 versus 71 roughly estimates. Microsoft started to rebound here. So Microsoft started to come back, but Google is just tanking hard. Here's Microsoft's numbers right there. We'll try to consolidate these and put them both up on screen if we can, so you guys can catch both of them. But yeah, that's got a bad numbers for Google. Good numbers for Microsoft, but it's still reacting pretty negatively here. There's the full numbers right there if you guys want to check it out. Again, we are getting a little bit of a bounce back at Google. We're up to 99 right now, so we'll see if we get some follow through here. All right, guys, we got Carol here to help me out as well. Let me see if the guidance numbers. We're going to try to check guidance numbers for you guys right here as well. I don't see guidance for Google, Microsoft. Microsoft didn't post earnings or earnings guidance either. So no earnings guidance for Microsoft, no earnings guidance for Google either. But yeah, look at Google tank. Google's down pretty big, down to $99 a share. I mean, here's the reality of it though. Okay, we were up so much already from all this that it's not as bad as it could have been. You know, it's not as bad as it could have been. And so again, Google tanking. Microsoft actually started to rebound a little bit here. There's Microsoft back up to 247.90s here. So Microsoft's starting to come back. Yeah. There's Microsoft starting to rebound here. Again, there's Microsoft starting to come back some here.
Hey everyone. Hey Eddie. How's it going? And yes, you spelled correctly. So.
Yeah. All right, yeah, quarter three sales, 69 miss. Here is some other information for Alphabet right now. We're going to put this in chat. Here's some more information in chat right there. Again, we got about 700 people here, so if you haven't already, hit that subscribe. We certainly appreciate all of you guys. Looking at Microsoft, I don't see any actual I don't see an actual guidance numbers for Microsoft. Microsoft coming back though. Microsoft did better than expected. Better than expected EPS, better than expected sales revenue. Google did worse than expected. You can see both of those numbers on screen right now. So again, Google did worse than expected. Microsoft did better than expected. I got to run, guys. I got to go do a kind of a doctor's appointment thing. We're going to stick around. So we're going to keep streaming. Of course, hit that subscribe button if you haven't already. We certainly appreciate it. Hit the notification bell. Also, if you haven't already, we are going to be streaming the full earnings call for Google. You'll be able to listen to the entire thing. Microsoft's starting to rebound back up. And so, yeah, look at Google start to come down. Look, Microsoft popping back up at 250. Let's see if it rebounds the market. It could. It could rebound the market here. We'll see.
Meta's a stock, huh?
Meta is Facebook.
Right?
Yeah, Meta is Facebook.
Yeah.
So.
What did it look like? Did you put in
Meta? I don't want to put anything else up right now just because here's Meta. I'll show you right here. So Meta is right there.
Ooh.
Well, every tech stock is going to be negatively affected by this, unfortunately. So like every tech stock is going to be kind of hurt by this. Google has bigger influence in markets than Microsoft. Yeah, for sure. That's why we're watching Google. I mean, we can look at Meta, but Google's dragging everything else up or down. So that's going to impact markets heavily. All right, guys. So get a little bit of a direction in Microsoft here. Google up to 99.4s. So again, let's see if Microsoft can hold the support. I'm going to let Kira hold it down again. I got to do a doctor's appointment right now. I'll update you guys on what happens. Spotify numbers are out today is also. So here's Spotify. Spotify dropped. We'll put Spotify's numbers in chat here as well. There's Spotify's numbers right there. And again, I'll be right back. I got a doctor's appointment I got to do, guys. So I'll be right back. I'll let Kira hold it down.
hit the button?
What button? All right. Well, here, just push that over. It'll be all right.
All right. Am I right? Hey guys. Yeah, John has a televisit to go over some test results, so I'm sure everything will be good though. No, not a prostate exam. Lululemon in the house. There you go. What, John?
Rosie, no. Rosie.
Oh, Rosie's in here. Rosie.
Okay, look, she's going to disconnect my computer. You need to put her collar on. Rosie, no. Rosie, out.
She's so funny. She just kind of tried to lay down on the floor,
Yeah,
but
that means from now on she needs to wear a collar. Here, where's your collar?
yeah. Yeah, Lilian, I think he'll be okay. It's just kind of got to check everything out, make sure everything's good. I'm sure he probably has talked about it on stream. It's he got kind of a weird EKG, so and they wanted to run some more tests, so that's okay. Full bear, sell everything. I know, man. I should, but I won't. Should buy everything, but I won't, you know?
I can kind of hang out until they show up.
Yeah, they're gonna take a second.
Yeah.
John's back.
Yeah. All right.
Yeah.
So Google tanked pretty hard. It's at 99.30s right now. Microsoft at 247s. Again, let me know if you guys are buying calls or puts right now. Microsoft at 247s. Google at 99.30s. Let me see this.
Of course he said that. Of course he said that if everything's good, he's eating barbecue.
Yeah.
That's very John-like. Totally YOLOing your account. He would be so pissed. He'd be upset with me.
Yeah. All right, guys.
You got to go back.
Again, the earnings call starts at about 45 minutes. Go back to what?
Where it had the news. So I could search news.
Yeah, here, just look at this right here. This is all the big news.
Okay.
Visa, here, read all that to him.
All right. Visa, fourth quarter 2022 adjusted
EPS.
EPS, okay.
193 is what Visa showed 193 in EPS, 7.8 billion in revenue. They raised their dividend 20% to 45 cents a share and announced a $12 billion buyback program. Spotify dropped third quarter 2022 EPS of minus 99 cents. Expectations was minus 82 cents. So Spotify came in much worse than expected. Revenue of 3.04 billion. They expected 3.02 billion. So a little bit better than sales revenue, worse than expected EPS for Spotify. So yeah, that's essentially what we got going on right now.
Yeah, a lot of this is kind of like in shorthand for
Yeah, you'll get used to it. Yeah, Spotify, it's gonna have a hard time being profitable for sure. You know what I mean?
Is there a way I could put one of these on?
Yeah, like Spotify is gonna have a hard time being profitable as a whole. Microsoft's starting to really break down. It's at 245.18s here, 245.18s. Google, we got it at 98.80s. So Google's trying to rebound a little bit, but had a pretty rough earnings report.
John, I put 5K of my 29K account into Microsoft.
Why?
So 2 times the margin. Hopefully it won't be 2.
Oh, on the drop of Microsoft, or like after Microsoft, or early? If you're taking 2 times your entire account and you're betting it on an earnings play ahead of earnings, no offense, sir, but you're gambling, man. You know, you got to stop that. That's risky, man. Earnings are a coin flip. They can have great earnings and tank, and bad earnings and rip up. You never really know what's going to happen. So, you know, just be careful, bro. I know that might not be what people want to hear, but, you know, like, just be careful, man. You know, stuff can go against you really quick in earnings, man. Again, this company can have amazing earnings, like Microsoft. Microsoft had better than expected EPS, better than expected sales revenue, and still tanked, still green or still red on the play. So yeah, y'all be careful.
Why Microsoft dropped? What's going on today?
We don't know. We don't know why it dropped, you know. So yeah, we really don't know why Microsoft dropped. You know, it's one of those things. We do have the full earnings call that we're going to stream live. I'm waiting for the actual earnings report to start. Or I'm waiting for my doctor's appointment to stop, so y'all just bear with me.
Yeah, I don't think it's going to take too long, so he'll be back. I know he's far better at this than I would be.
Yeah, so the actual earnings report is going to be live in about 40 minutes or so, and we're going to cover that live as we always do. Cloud revenue growth disappointed on Microsoft. Yeah, for sure. Like a lot of it came in worse than expected. Yeah, Snapchat, man. Hey, man. No, everybody hated. Yeah, I'm not sure if they might be waiting to announce guidance post or during the actual earnings call. Like that might be what's going on with Microsoft. They might just be waiting for during the actual earnings call to release their guidance, which are future projections. So yeah, we'll see. Again, we do have the full earnings call going to go live in about 40 minutes. I'm waiting for my doctor's appointment to start. It's supposed to start at any time now. So y'all bear with me. I'm supposed to get my reports on my echocardiogram. Kind of nervous about it. I'll be all right.
Yeah, I think things will go well.
Yeah.
So.
But yeah, just keep reading that news.
You put it off the screen.
Let me see. It's TD Ameritrade. It's at the bottom.
Oh. I'm looking for it. No, I don't. Which one? It's on this one?
Here. No, here, baby.
You have so many tabs open.
Yeah. All right, I was making sure. Sorry, my appointment's supposed to start pretty soon. Hey, thank you, D. I appreciate you, man. You're looking for this. It's the green one. It's TD Ameritrade, and then you're looking for that right there. Spotify didn't really come out with anything. I gotta go, guys. I gotta go do this doctor's appointment.
Dude, they'll come to the that screen will change when it starts up. Let's see. Nothing new on the news. Yeah, Sir Sticky, that's true. But hopefully we'll get some clarification today. I'm sure everything will be good. Life is good. I mean, it's busy, you know. Maddie already got the flu.
Yeah.
It's that time of year, you know.
Yeah, I'm just going to sit here until the appointment starts, and I'm going to walk away.
Yeah, that's true.
But yeah,
Allie in the Bay, that's true, huh? He's always my nectar cousin.
Yeah, Google at 9860. So again, let's see if Google can get back over 100 sometime over the next few days. My Snapchat trade did great today.
I thought it was Google today.
It is Google.
Okay.
You see Google up there. It's the top right. It's G-O-O-G.
Yeah, Google earnings.
Yeah, that's probably what it is, Sir Sticky. I mean, I'm fine. They did all this EKGs and stuff. They didn't find anything like super dangerous. So it's not like, you know, I'm in trouble or anything, but yeah. Also wasn't necessarily good, I would say. They found what's called a right bundle branch block in my heart, but you know, for some people it's normal to have a right bundle branch block. For other people, you know, for other people, it could be normal, but it could also be a signal of other heart problems. So that's all it is. And so it's not like I actually have heart problems necessarily, but that's what they're going to tell me on this page or on this meeting, which I'm kind of nervous about if you can't tell today. Google up to 98, 90s. They still haven't started the meeting. I'm waiting. It's supposed to start right now.
I'm sure they're coming.
Yeah.
Yeah, I think that when they pick stuff up like that, that they have to basically rule everything out, and that's what his doctor was doing. So
yeah, that's all it is, I think. Again, we do have the actual earnings call. Yeah. Yeah, Snapchat, man. Listen, people hated on me heavy for that Snapchat trade too, bro. People were like weird about that Snapchat trade, man. So it feels good, to be right, because so many people were calling me names and all this stuff for buying Snapchat after earnings. Like, just to look at Snapchat real quick here. Hold that if they show up. Like, just to look at Snapchat real quick. Like, look at this. Microsoft testing lows, but look at Snapchat. Like, Snapchat flew up today before any of this. I bought Snapchat after this drop. The reason was obvious. I mean, it was just down so much already. Snapchat has hundreds of millions of daily active users. And so it's just kind of like, of course, like when you look at it, some people are going to see value, some people aren't. When I look at it, I see objective value. I mean, it's just a company that's got hundreds of millions of users that's at 7 something a share. Right. So, of course, I buy that dip. It was a small risk. It could have gone against me. Like, they're not always going to work. But like I said, it kind of shows you that the people who are the loudest about other traders' trades are usually the worst traders, Yeah, I mean, like I said, Mauricio, it's just objectively valuable, I think, at $7 a share, just in terms of the price it's been over the last couple years. Just objectively valuable. Again, think about how many users it has, how much Snapchat is used. Okay, wait, here's the call. Hold on. Hello? Hi.
Yeah, I know he likes to play it safe. Doesn't like to. I mean, I think he takes some risk. I mean, I think that's kind of involved in this type of thing. But I think he's relatively less risky, less risk. I don't know, which is quite telling because he's the same way in our personal life. It's very risk calculating, calculated risk. Yep, exactly. So, how's everyone else been? Hopefully, it's starting to feel like fall where y'all are. It's starting to get cool. It was great here today. We had a cold front come through. People trade all they live. Yeah. That's what I feel like with John, Rosie. Rosie. Oh. She came in here and laid down because she doesn't want me to kick her out. I see you. I see you. She's gotten probably big since the last time y'all seen her. Let me see. Watch out. Come here. Come here. Come here. Watch your head. Oh. Oh, thank you, baby. Oh, thank you, baby. Yeah, thank you. Thanks for coming saying hi. Yeah, say hi. I see you. All right, you got to get down. You got to go out. Out. Ah. Rosie. Out. Sorry, guys. Hang on. Rosie. Out, baby. Come on. Out. 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 John. Yes. Oh, okay. All right. John worries so much about her unplugging the cords that I got to be careful. We need to set up all of his cords a little bit. Oh, thank you, guys. She's such a special dog. I mean, I feel like everyone kind of says that, but she really is special. Beautiful in South Carolina. What's it like over there? What's the temperature? Rosie is just over a year. She turned, about a year and a month or two. So September 14th was her birthday. So she's a year and a month and a half, maybe. So nice and cool in Napa. Ooh, that sounds nice. We're in Southeast Texas. So we kind of had a cold front come through and We have an 8-month Belgian Shepherd. Awesome dogs. Yeah, so smart. I mean, that's one thing that still shocks me. Is like how smart she was. Because I've had a Lab Retriever mix, and I mean, don't get me wrong, he was a great dog, Bo, when I was a teenager. But it's like there's a person in there with Rosie. She like understands everything I'm saying. Florida feeling great, 70s and 80s. Sounds nice for Florida. I mean, it's kind of like Texas where it's like maybe it'll dip down in temperatures, but some Christmases you have where you can wear flip-flops and shorts. 66 in Virginia. Ooh, it's nice. So it's starting to feel kind of like fall then. That seems kind of hot for Jersey right now. I feel like Jersey would get colder than down here. Oh, that's cool. See, we talked about doing that, about training her for that, because it's, you hope that if something happens, like if someone, say like a dog, if someone comes into your home, that they would react in a certain way, but I feel like that's maybe not always the case. So I guess it's good to, especially if they're capable. Yeah, Belgian Shepherd is definitely capable to do that type of training. I feel like, you know. South Carolina was 46. And morning high of 76. It's quite a large gap in temperatures there. It heated up pretty quick. Yeah, today I think it was like 50 something in the morning. It was so nice. So yeah, we've had the cold fronts coming through, which is kind of normal for this time of year. It blows a bunch of cold air in, cold weather, and then it stays for maybe like a day or two, and then it just gets hot again. That's what I'm hoping, Angela, you know? And I feel like she's capable of it, but, you know, you got to wonder if that's like...
Still waiting to be seen.
Okay.
Wait, how did you get the fan to work? It was making a bunch of noise last time.
I don't know.
All right, guys, so Google's still down. Still waiting to get seen by my doctor.
I'd like to listen in on your call just to hear what she says,
Here,
if that's
baby,
possible.
the whole point, I know, but the whole point of you holding this down was to, you know.
Perfect in Houston.
Yeah, it's pretty nice right now. You know, it's pretty nice. It's not super cold. It's pretty easy.
Yeah, it's just the right temperature.
Yeah, like it's pretty solid right now. It's not great. It's not terrible, you know. It's not like super hot or super cold. I mean, but it feels good. All right, so I did I'm in the doctor's thing, kind of waiting to be seen here. But
do you want to scoot over or something? What do you want me to do?
No, it's all right. I can stand. Why don't we could also just raise the desk and both stand, which probably be easier.
Let's do that.
You know, than trying to fit all these chairs in here. Hold on, here, just hold that. Here, I'll move everything. Just hold that.
Man, the sun's really coming in.
All right, there you go.
Exactly, Adele. That's what I feel like you should never, it's never a bad idea to have a second pair of ears when listening to this kind of stuff with the doctor's office.
Yeah, I mean, like I said, I'm sure everything's fine. Like, I'm pretty sure I've just been over worrying. So it's all good. All right, guys, we got about 25 minutes left until the Google earnings call. Again, we're going to stream the full earnings call here live as we always do. Microsoft dropped earnings. Let's see what else showed up right now. I think that's all the big earnings right now.
Smells good in here though.
Yeah.
You got your candles going.
Yeah, it's not bad. All right, guys, so we got the earnings call starting soon. Maybe we should have streamed Microsoft.
They both came out today.
Well, yeah, Microsoft and Google dropped earnings today. So, you know, it's a little bit of a mix of both. Rosie sounds like a leaky faucet.
Yeah, I don't know if y'all could hear her in the video. She does this whine where it sounds like a faucet, like a just barely running faucet.
Yeah. But yeah, Google just got hit, man. Unfortunately.
You remember that, Matt? And also the mustard, push-ups and mustard.
Yeah, man.
I kind of enjoyed the mustard part, low-key.
We were making money, bro. I mean, listen, I'm tempted to do it again. I just don't know if, like, not during all these hard problems.
Once you get your good results, then
if we get good results, like I said, I think I'm probably fine. But like, still, honestly, bro, they're making me wait long enough. You know? Nah, somebody paid me $600. It was Daniel, and mostly Daniel. It was a few other people, but we did like 520 push-ups that day. I did. No, you know, I did like 500 plus.
No mustard tax orders.
Yeah.
Excuses. I feel like that's something John would.
Bro, the mustard spoons, I just can't get behind that, dude. It was just gross. Also, guys, y'all check out Top Step. Top Step is a funded account program for futures. They give you a demo. If you can hit their target on the demo while following their rules, they fund you between 50 up to 150,000 with a 90% split. There's no PDT in the futures market. You can day trade and short with no PDT restrictions, and you can essentially trade these big earnings reports. Like if you look at the E-mini here on the left side, you can see it looks pretty similar to Google here. You can see big drop just from Google. And so again, they do follow each other to a certain extent, and you can trade some of these big earnings drops like this in the futures market with no PDT restrictions. Top Step is the gold standard. They are the most legit. They fund thousands of traders a year, pay out millions of dollars a year in funding. And so if you want to check them out, there is the link in chat. We'll also pin it to the top of the page. Great way to help support the channel. Again, we do have the earnings report, or we do have the earnings call actually going live in about 24 minutes, guys. 24 minutes, we'll get that earnings call going live for you all. And yeah, hopefully they could say something positive about Google moving forward. Yeah, we're still kind of hanging out. If you want to let me know when they're ready.
Yeah, I can. I'm just responding to something.
Yeah, just don't walk over there. I got to get my cords situation straight. Yeah, I mean, some of my favorite strategies, like we had a pretty green day in Top Step. Like here's our stats today. You know, we made a little bit. I mean, we could have traded more. Last couple days has been a losing. Like last week has been a losing week, and so it's like I haven't really wanted to size up or trade very big. You know, one of my big rules, and I think it's a rule that's necessary for most people. One of my big rules is that when I'm losing, I scale down. You know, and so we've been scaling down the last few days. We'll scale back up tomorrow. Now that we've had a couple green days in a row. Spotify came out. Yes, Chart Prime's still my sponsor. They're pretty cool, man. Like check them out. Like we use them pretty regularly for our trades too. There's just a lot of cool trades to get involved with. They're just really accurate is what it really is. Look at Google, for instance. And nothing works 100% of the time. But like what I like using them for, like look how accurate they are in Google here. So here's Google today. All right, so here's Google. You could look at this here. So again, possible reversal down, drop, possible reversal up, bounce, possible reversal down, drop, possible reversal up, bounce, possible reversal down, drop, bearish engulfing candle and a red downward sign, big drop here. So again, you can see how accurate they are. They're really, really accurate. You can even just use their candlestick momentum, which is just really powerful too. Bullish engulfing, huge bounce, bearish engulfing, big drop. And so again, check out the link in the description. You can use my promo code and get 20% off. They're just really useful. Just really, really useful. So again, check them out. A great way to help support the channel is by checking out Chart Prime. They are a sponsor. A great way to help support us. We appreciate it. Yeah, dude. Now you see how I felt, bro. That light was like bane of my existence last week, bro.
Very bright. John tried putting up like a pillow or something to kind of cover the window, but then you could see it from the front of the house. So
bro, where is my doctor, dude? We're 20 minutes in, bro. Where are they at, man? Like, I'm in the weight room. You see me in the weight room. If they try to pretend like I'm not waiting for them, I am. I just did the run up.
No, they'll call you if there's...
Yeah. All right. That drop on Google was baked in my opinion. I mean, it came down to exactly where I've seen so many before hold. Yeah, I mean, here's the big level, right? The big level for Google here is $100. It's $100. Microsoft is at 245.40s here. So Microsoft trying. Yeah, tomorrow we have Meta, which is going to be interesting. You know, tomorrow we have Meta, which is big, you know. We're going to stream Meta too. So yeah, tomorrow, where's Wednesday? Yeah, tomorrow we got Boeing, Waste Management, Bristol Myers, Hilton in the morning. And then in the evening, we got Meta, which is what we're going to stream. And then Ford, of course, as well. 98.80s for Google here. So again, still moving. They're going to flop. Cloud revenue was lower. Yeah, so basically what happened with Google here, it looks like. Okay, go ahead. Here, go around the other way. Don't go that way. That would not. Don't go that way. If you disconnect my computer, okay. Bro, hey, listen. I've accidentally disconnected my computer like 5 times over the last like month. All right, guys. So yeah, Google is down. Their cloud revenue. Here's their full list of kind of results in chat. Like that's Google's full list of results. Again, what do you guys think for Facebook? Is the real question here. Microsoft up to 245s. Rising rates is one reason the market moves. Any data comes out and shows strong economy will help federal rates. Yeah. Well, yeah. Well, no. What happened? What really happened? The reason. Okay. Basically what happened, the reason we are moving up so much today is because the government sold bonds. They sold, let me see how much they sold. They sold $42 billion worth of bonds. When they do that, they sell in order to raise interest rates. Like the whole reason they sell bonds is to raise interest rates, right? So like that's what they're doing is they're trying to raise interest rates. That's going to cause an optimistic sign in the market, and that's going to cause people to be bullish. And that's what happened today, is the government selling bonds. It depends on what kind of technicals you're talking about. Technicals aren't purely irrelevant. It really depends. All right. So like the truth of it is extension matters right now. I've been playing off of extension for the last like three months. Like again, bears get really weird. You know what I mean? Like I've had so many people attack me over my swing trades that have all been correct. Snapchat, correct. Disney, correct. Apple after the dip, correct. You know what I mean? Like people just DraftKings, correct. And so again, it's all of these trades are based off of extension. You know, I look for big drops. I wait for big drops in markets, which I believe would be considered technical. I mean, it depends on what you consider technical or not or fundamental. But I wait for big drops in markets. And when it looks to be objectively valuable, I buy the dip. And people say it's catching a falling knife, or say whatever they want to say. I don't think it matters that much. I think catching a falling knife is a penny stock term. Like, I would rather look for objective value. And so when something just gets absolutely destroyed short term, I'm there to buy that dip. And people can criticize that, and that's fine. But the reality of it is, it works very well for me personally. Maybe not for you, maybe not for other people, but it works very well for me personally. I'll buy that dip all day. Again, did it with Disney. I'll do it with Snapchat too. It just works. It's powerful. Yeah, win's a win. That's right. 100%. All right, guys. Google starting to pop up a little bit. Microsoft at 245s. Yeah, so it still hasn't started yet, huh? They still haven't started me, right?
Mm-mm. Anyone else been watching House of Dragon?
Yeah, we got a lot of people here watching.
So
how can you find the info about the government selling bonds? What's being reported to all the major news sources? There's a lot of different reports of this. Again, basically, what they dropped was that the U.S. sells 42 billion of 2-year notes at 4.46%, tails 1.2 basis points, which is better than last time. That's why it's causing such an optimistic response here. That is the news right there. All right, guys, we got about 16 minutes until we actually have the full Google earnings call. All right, guys, y'all ready for the actual earnings call?
oh, here, John.
Okay.
Here, hang on, guys.
Oh, sorry.
Hang on a sec, guys. Hang on, guys. John's doing his call, so I'll be here, but I'll be back in just a second. Thank you, Charlie Wood. He definitely is a good man, but I appreciate that. Hey guys, I'm still here. Sorry about that. I'm listening in on John's call. I just want to make sure you have a second pair of ears here. So just a sec. I think he's finishing up. Thank you, Joe. I appreciate that. I'll try to come on more often. It's just been busy with the kids. So hang on. And it seems like we got good news, so that's good.
All right, good. So everything's normal with me. My heart's fine. My heart's functioning normal. The echocardiogram, man, it is bright over here. This is the second day in a row this has happened.
I've been struggling to like get somewhere where it's.
You're just not tall enough.
Yeah, I've been trying to stay on my tippy toes, and it's not really working. But yeah, good news, guys.
There we go. So, all right, so great news. We're gonna get ready. We got 5 minutes until the actual earnings call goes live.
Wait, I'm too short now.
I'm sorry, baby. But yeah, that's great news. So hey, we'll take that. Yeah, we got the actual Amazon earnings call coming live pretty soon. Bear with us. Yeah, that's pretty good news. I'm happy about it. And they also said, like, I got a diagnosis of thank you, baby. I got a diagnosis of peripheral artery disease like 2 years ago from one of my doctors that, nowadays they said that it was probably a misdiagnosis, that they don't see any signs of that either, which is good. All right, guys, we're getting ready for the actual earnings call.
Then you must be pregnant.
Yeah, for sure. All right, guys. Yeah, the earnings call starts pretty soon here. Alphabet. Is this a different alphabet, or it's got to be today, right?
Sorry, hit the mic.
That's all right. Love you. So the earnings report's actually below you here, so you can actually read it right here below it. Yeah, so definitely happy to see that. That'll be good. Yeah, it's kind of shining on me.
I know, it's bright.
Yeah, barbecue time, that's right.
No, don't encourage him.
Honestly, my heart's good, dude. I can eat whatever, bro. I got the top 3 hearts in the world right now, and I'm gonna go eat barbecue sauce and a bunch of other stuff. Honestly, I'm really not though, because I'm honestly nauseous, man. I've been nauseous all day. It's probably the freaking aspirin I've been taking, thinking my heart's gonna go out. But yeah, it's good news. So
you should still eat healthy, though. Don't encourage him, you guys. He needs to eat healthy and be around for a while for me and the kids.
Yeah. I mean, I can eat some barbecue every now and then, man.
We had barbecue like a week or 2 ago before all this came up.
Yeah. So. Barbecue's good. All right, Google pulling back. Microsoft is trying here. We're going to get this webcast going. All right, guys. The actual call is supposed to start about 3 minutes here. Yeah, thank you, Walter. I appreciate you, bro. YOLO. That's right. Barbecue time. Like I said, I figured my heart was normal. I really did. Like I assumed my heart was fine. You know what I mean? Like all the blood work I've ever done, like they would have seen something already. Like I said, and we also went and got the calcium test yesterday, and I looked at it myself. And I mean, I'm not a doctor, but I'm definitely top 3 most smartest guys in the world right now who can interpret that calcium test. And for my analysis, the calcium test was fine. And that's what she said. She said calcium test. I got a calcium score of 0 in my heart, 0. And so, she said that I had trace amounts of whatever, I don't even know what she said. She said basically my heart's good. She said I got the heart of a 16-year-old. Okay. Is basically what she said. Yeah, I've been eating salmon every day, bro. I've been eating salmon and fish every day. I'm tired of it at this point in time.
Oh yeah, we just got those 2 big fillets that I was gonna.
Yeah, I don't want any more fish.
Too bad.
The actual earnings call is gonna be live right now in about 2 minutes, guys. So y'all be ready. We're gonna stream the earnings call. It goes live pretty soon.
Sorry, guys. It's hard to see the screen. I kind of have to hide out.
Wait, did they change this from last time? Wait a minute. Did they change this? Is there another?
Trying to dodge the sun. It's not working.
Let me see. Google earnings call. Investor relations. I guess they changed it, man. I mean, it's Q3. I guess the way they do it is this now.
You can have barbecue veggies.
Could be anxiety. Could be a lot of stuff.
Well, he went in and they did a
could be most likely stomach problems from taking all this aspirin is realistically what caused it.
Yeah. Well, I think that you also got to test, and it's like, and I felt like this is just another example why it's always good to maybe get a second opinion. Sometimes
I guess 20 minutes.
20 minutes.
Yeah, about 20 minutes. Or 20 seconds, I mean, sorry, 20 seconds.
But yeah, I mean, because sometimes I think blood tests are pretty straightforward, but like, it could just be one off or the machine's not working properly, which hopefully was the case with this. And then they tell you that you get that news, so you're thinking about it constantly.
Yeah, hold on. I'm gonna mute the music so I can listen to see when the earnings call actually starts. All right, guys, earnings call should be starting anytime now. All right, still hasn't started yet. We're waiting for the numbers to come out here. Bear with me, guys. Again, it still hasn't started yet. We got the whole music up, waiting for it to start, guys. Bear with me. Let me get the music done. Again, can y'all hear the sound? Could y'all hear the music prior to me muting it about 2 minutes ago, minute ago? Could y'all hear the music? Let me know. The earnings call should be starting pretty soon. Where can we see the earnings report? So you can see all the earnings stuff down here. Again, waiting for it to start here. Nothing yet. There we go. It's live.
Good afternoon, everyone, and welcome to Alphabet's third quarter 2022 earnings conference call.
Sound check.
With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking, and such statements involve a number of risks and uncertainties that could cause actual results to differ materially. For more information, please refer to the risk factors discussed in our most recent Form 10-K filed with the SEC, as updated in our Form 10-Q for the quarter ended September 30th, 2022, expected to be filed with the SEC later today. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. And now I'll turn the call over to Sundar.
Thank you, Jim, and good afternoon, everyone. Our financial results for the third quarter reflect healthy fundamental growth in search and momentum in cloud. Our reported results reflect the effect of foreign exchange. The growth in our advertising revenues was also impacted by lapping last year's elevated growth levels and the challenging macro climate. We are sharpening our focus on a clear set of product and business priorities. The product announcements we've made in just the past month alone have shown that very clearly, including significant improvements to search powered by AI, new ways to monetize YouTube Shorts, which will support the creator ecosystem, a strong series of hardware launches, and a new partnership and product announcements at Cloud Next. These will all drive value for users, partners, and our business. We've also started our work to drive efficiency by realigning resources to invest in our biggest growth opportunities. Over the past quarter, we have made several shifts away from lower priority efforts to fuel higher growth priorities. Our Q4 headcount additions will be significantly lower than Q3. And as we plan for 2023, we'll continue to make important trade-offs where needed and are focused on moderating operating expense growth. Throughout Google's history, periods of dedicated focus have enabled us to emerge strongly and unleash new eras of computing innovation. For example, over a decade ago, focusing the company's efforts on mobile helped us to build and grow our business for the shift to mobile computing. We are at a similar point now with AI, another transformational technology. Our investments in AI and deep computer science mean that we can deliver a wide range of breakthroughs across our products and services to help people, businesses, and communities. Turning to the quarter, first, our core information products. At our Search On event, we shared how we are using AI advances to deliver a more natural and intuitive search experience. These advancements will soon help to surface things you might find helpful before you've even finished typing. We're also making visual search more natural than ever before. People now use Google Lens to answer more than 8 billion questions every month, using just a photo or an image. Now we are supercharging our visual search capabilities to help people find what they are looking for at businesses nearby. Philip will also talk in more detail about our work to make it easier to shop on Google, a key focus. Google Lens also has an amazing translation feature. It can now blend translated text seamlessly into the background of images, like menus or street signs, in just 100 milliseconds, shorter than a blink of an eye. Through advanced language models, AI is unlocking new experiences that support more natural and conversational ways to interact with computing. Lambda is one of our most promising models for this. It's now available to demo in our AI test kitchen, which offers a way for people to experience and give feedback on emerging AI technology. DeepMind also debuted its most helpful and safest language model yet. Sparrow can talk to users, answer questions, and provide evidence-based answers using Google Search. Moving to YouTube, another big priority. We remain focused on long-term growth for our community of viewers, creators, and advertisers. To that end, we announced some exciting changes at our Made on YouTube event last month. First, improving the monetization of Shorts. This is a big deal for creators and for our business. We'll introduce revenue sharing on Shorts early next year. This update makes YouTube the only platform where creators can monetize their content across short, long, and live formats at scale. Shorts continues to show great user momentum. And we continue to invest in our mobile video tools for creators. We are seeing mobile-first creators investing more in the platform, creating content that helps the broader community grow. TV is a big area for us as well. Nielsen reported that YouTube was the leader in streaming TV viewership in the US in September for the first time. Turning next to hardware. Hardware is an important area of investment for us. We are investing deeply from the silicon to the OS to powerful software experiences because it's a big opportunity to move computing forward and build deeper relationships with people who love using Google products. It also really helps to guide the Android ecosystem beyond just building the underlying platform. Earlier this month, we introduced the Pixel 7, the Pixel 7 Pro, and the very first Pixel Watch. We've also previewed more detail about the Pixel tablet, which is coming in 2023. Pixel combines our foundational technologies, AI, Android, and our Google Tensor G2 processor to bring state-of-the-art AI directly to the device. The Pixel 7 and Pixel 7 Pro offer industry-leading photography features that can unblur or sharpen photos and shoot cinema-quality videos. We recently had our highest-selling week ever for Pixel, and I'm really proud of the positive reviews so far. Along with great devices, we introduced our latest release of Android. Android 13 offers new personalization features, improved privacy controls, and a more seamless experience with connected devices. Next, Google Cloud. We see continued momentum with Q3 revenue of $6.9 billion, with Google Cloud Platform's revenue growth rate above the aggregate. I've long shared that cloud is a key priority for the company. The long-term trends that are driving cloud adoption continue to play an even stronger role during uncertain macroeconomic times. Google Cloud helps customers solve today's business challenges, improve productivity, reduce costs, and unlock new growth engines. At Cloud Next, we unveiled more than 100 new products and announced new and expanding relationships with Toyota, Prudential plc, Coinbase, and AppLovin. The shift to hybrid work continues, with organizations evolving to support an increasingly distributed workforce. I'm proud to share that Google Workspace is now used by more than 8 million businesses and organizations worldwide. That includes Korean Air, as well as the US Army, which is transitioning 250,000 personnel to our secure communication and collaboration platform. In the past year, we have announced nearly 300 new capabilities to support hybrid work. Empowering a distributed workforce brings an increased need for cybersecurity to keep workers' data and critical business systems safe and secure. It's top of mind for nearly every CEO I speak with, and customers, including the city of Los Angeles, Roche, and Banorte, put their trust in Google Cloud's industry-leading products. Our new Chronicle Security Operations Suite unifies security analytics, automation response, and threat intelligence. This has helped Vertiv analyze 22 times more security data while cutting investigation time in half. In September, we closed our acquisition of Mandiant and are proud to welcome more than 2,600 colleagues to Google. With Mandiant, we add industry-leading threat intelligence and incident response capabilities to help customers stay protected at every stage of the security lifecycle. Customers partner with Google Cloud because we offer a single platform that can analyze data across any cloud. Our leadership here is winning customers across industries, including the state of Hawaii and the Australia Securities Exchange. Our capabilities help solve difficult business challenges like supply chain and logistics, while also creating new growth opportunities. And as companies globally are looking to drive efficiencies, Google Cloud's open infrastructure creates a valuable pathway to reduce IT costs and modernize. In addition, with our new media CDN product for large media streaming workloads, we are helping Major League Baseball and Paramount Plus deliver flawless experiences to their customers. And with Google Cloud Edge, Rite Aid is more efficiently helping patients in their pharmacies. Across all of these areas, I'm proud of the trust and enthusiasm our customers are placing in Google Cloud. Briefly on our other bets, Waymo announced that Los Angeles will be its third ride-hailing city, joining Phoenix and San Francisco. Waymo will begin by mapping several neighborhoods in LA as it prepares to serve people there. Wing just surpassed 300,000 commercial deliveries. It's servicing new areas in Australia and announced its first drone delivery trials in Ireland. To close, times like this are clarifying. As we head into 2023, we are going to focus on our most important priorities as a company. To support our growth, we'll continue to invest responsibly for the long term in a way that is responsive to the current economic environment. I want to thank our employees around the world for their contributions over the last quarter. We help people, our partners, and society when we focus on what we do best and execute on that really well. Over to you, Philip.
Thanks, Sundar, and hello, everyone. It's great to be joining you all today. Google Services revenues of $61 billion were up 2% year-on-year, negatively affected by a sizable foreign exchange headwind. Search and other revenues grew 4% year-over-year to $40 billion, led by travel and retail, while both YouTube ads and network had modest year-over-year revenue declines. Other revenues were up 2% year-over-year, with growth in YouTube non-advertising and hardware revenues offset by a decrease in Play revenues. Play revenues were lower due to a number of factors, including a decline in user engagement in gaming from the elevated levels seen earlier in the pandemic. Among other factors, this shift in user behavior also created downward pressure on our advertising revenues, with lower revenues from app promo spend on YouTube, network, and Play ads in Search and other. I'll highlight a couple of other trends that affected our ads business in Q3, and Ruth will provide more detail. On the second quarter earnings call, we noted a pullback in spend by some advertisers in YouTube and network, and these pullbacks in spend increased in the third quarter. In Search and other, the largest factor in the deceleration in Q3 was lapping the outsized performance in 2021. In the third quarter, we did see a pullback in spend by some advertisers in certain areas in search ads. For example, in financial services, we saw a pullback in the insurance, loan, mortgage, and crypto subcategories. There's no question we're operating in an uncertain environment, and that businesses big and small continue to get tested in new and different ways depending on where they are in the world. When it comes to how we're helping, our focus remains unchanged. The same AI driving breakthroughs in everything from protein folding, flood forecasting, and language understanding is also fueling innovation across our ads products. Via insights, automation, and easier-to-use advertising tools and formats, we're helping businesses stay agile, build resilience, anticipate the future, and show up for customers in more connected, visual, and consistent ways. We're helping them understand demand, deal with inventory challenges, increase loyalty, and much more. In challenging times like these, advertisers are carefully evaluating the effectiveness of their budgets. Search tends to do relatively well in such an environment, given its strong measurability and focus on delivering ROI. It's also well suited to quickly adjust to changes in consumer behavior. And when search is coupled with our automation products across bidding, creatives, targeting, or Performance Max, it can drive performance even further. Let's talk retail, an important vertical for us. No matter where shoppers are buying, whether it's in store, online, or both, we have the solutions to help them deliver results wherever their customers are. Take online fashion retailer Revolve, who used its global influencer network along with our category insights and automated tools to acquire new customers at lower costs. As festivals and events returned this summer, Revolve used lower funnel solutions across search and shopping to engage with consumers in high-demand apparel categories, helping across $1 billion in trailing 12-month net sales for the first time. And then there's Magazine Luiza, a large Brazilian retailer who embraced omnichannel by measuring and bidding directly to store sales. Coupled with in-store pickup annotations via PMax, Magazine Luiza drove a 38% ROAS over 30 days and has since expanded the strategy to all eligible products, including 8 million plus new offers. And whether shoppers know exactly what they're looking for or are just seeking inspiration, we're innovating to make it easier and more engaging for people to shop online across our surfaces. From finding the best deals across all types of merchants, including 200 million plus available daily deals in Q3, to new ways to search. Now, when you type shop, followed by whatever item you're looking for, you'll unlock a visual content stream of ideas that feel just like window shopping, but online. And then there's YouTube. Not only can users now buy more products and videos, but shopping as entertainment experiences are bringing the magic of our creators to the shopping experience. Like in September, when Kylie and Kris Jenner hosted an exclusive shopping stream event to celebrate the debut of a new Kris collection for Kylie Cosmetics. And at Adweek last week, not only did we announce that product feeds are coming to Discovery, but that creators will soon be able to tag products from brands across their videos, shorts, and live streams. This means viewers can shop products seamlessly while they watch their favorite content, while merchants can drive incremental reach and engagement for free listing offers when tagged by creators that viewers love and trust. I already touched on YouTube's performance in the quarter. Let's deep dive into what we're focused on. First, we're helping advertisers understand how they can drive effectiveness with every campaign they run on YouTube. Full funnel is a key way to do this. Buying YouTube across consideration, awareness, and action allows marketers to meet customers at different stages in their purchasing journey, which we know are increasingly complex, while delivering towards a key business goal. Creative and media work together across the funnel to create new demand and convert current demand. Castlery, a Singapore furniture retailer, activated a full funnel approach as part of its US expansion. It used brand and action formats, identified its most relevant audiences, and built a robust measurement framework to boost sales and awareness, including a 65% increase in US brand searches. Castlery is using the same strategy for the upcoming holiday season. Two other areas where we're continuing to invest: connected TV and shorts. First, on CTV. Eyeballs keep moving away from traditional TV. On average, global viewers are watching 700 million plus hours of YouTube content on TV daily. And according to Nielsen, during the 2021-2022 US broadcast seasons, YouTube reached more viewers during prime time on CTV than any linear TV network. Brands continue to take notice. Like Instacart, who tapped into CTV to maximize its TV screen strategy for its The World is Your Cart brand campaign featuring Lizzo. It drove breakout searches for its product and above average brand lift across awareness, consideration, and purchase intent. And it also engaged a significant increase in audience on top of TV with 66% lower CPMs. And then there's shorts. 1.5 billion users every month, 30 billion daily views. Engagement is strong. We've always said that we focus on building great user and creator experiences first, and then follow that with monetization over time. As of September, ads on Shorts have officially launched via Video Action, app, and Performance Max campaigns. As Sundar mentioned, we also extended the YouTube Partner Program and announced our revenue sharing model for Shorts creators, the first of its kind for short-form content. It's early, but we're encouraged by the progress we've made this year in Shorts monetization and support for sustaining the creator ecosystem. I'll close with something I've said before, and I think it's worth reiterating. Our success is only possible when our customers and partners succeed. Whether it's helping individual YouTube creators or Play developers make a living and build thriving businesses, or bringing the best across Google to our partners, our focus on driving growth for our partners and key ecosystems remains steadfast. I'm proud that over the past 3 years, we've paid creators, artists, and media companies over $50 billion. In terms of how we're helping our partners innovate, I'll share 2 highlights. First, a transformative partnership with Transsion, the #1 OEM in Africa and Pakistan, will help it close the digital divide by doubling annual activations by 2025 and build helpful products for the next billion users. And then, in commerce, with FEMSA Digital in Mexico, we're bringing together solutions across ads, cloud, maps, Waze, and beyond to bolster its data and analytics capabilities so it can better reach and retain its beverage and retail customers. On behalf of many, a massive thank you to our customers and partners for their collaboration, trust, and feedback. And another massive thank you to our sales, partnerships, product engineering, and support teams. The hard work, dedication, and ingenuity of Googlers, especially during more challenging times, is truly second to none. On that note, over to you, Ruth.
Thank you, Philip. Our financial results for the third quarter reflect healthy fundamental growth in search and momentum in cloud. Our reported results clearly reflect the effect of foreign exchange. My comments will be on year-over-year comparisons for the third quarter unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the third quarter, our consolidated revenues were $69.1 billion, up 6% or up 11% in constant currency. Our total cost of revenues was $31.2 billion, up 13%, primarily driven by other cost of revenues, which was $19.3 billion, up 20%. The biggest factor here was costs associated with data centers and other operations, followed by hardware costs. Operating expenses were $20.8 billion, up 26%, reflecting the following. First, the increases in R&D and G&A expenses, which were driven primarily by headcount growth. And second, the growth in sales and marketing expenses, which was driven primarily by increased spending on ads and promotions, followed by headcount growth. Operating income was $17.1 billion, down 19% versus last year, and our operating margin was 25%. Other income and expense was a loss of $902 million. Net income was $13.9 billion. We delivered free cash flow of $16.1 billion in the quarter and $63 billion for the trailing 12 months. We ended the quarter with $116 billion in cash and marketable securities. Let me now turn to our segment financial results. As a reminder, we provide fixed foreign exchange revenues only at the consolidated level and by geographic region. All segment revenues are reported on a GAAP basis. Starting with our Google Services segment, total Google Services revenues were $61.4 billion, up 2%. Across our advertising revenues, the year-over-year deceleration in growth rates versus the third quarter of last year was largely driven by lapping very strong performance, most notably in search and other revenues. Additionally, the year-on-year deceleration on YouTube and network reflects a pullback in spend by some advertisers, as we first noted last quarter. In terms of the revenue lines, Google Search and other advertising revenues of $39.5 billion in the quarter were up 4%. YouTube advertising revenues of $7.1 billion were down 2%. Network advertising revenues of $7.9 billion were down 2%. Other revenues were $6.9 billion, up 2%, reflecting several factors. First, subscriber growth in YouTube Music Premium and YouTube TV continued to drive ongoing strong growth in YouTube non-advertising revenues. Second, we delivered solid growth in hardware revenues, primarily from sales of the Pixel 6a. Finally, the growth in these two areas was offset by a year-on-year decline in Play revenues, reflecting a slowdown in buyer spend due to a number of factors, including lower engagement levels in gaming compared with earlier stages of the pandemic. In terms of costs within Google Services, TAC was $11.8 billion, up 3%. Google Services operating income was $19.8 billion, down 17%, and the operating margin was 32%. Turning to the Google Cloud segment, revenues were $6.9 billion for the second quarter, up 38%. GCP's revenue growth was again greater than Cloud's, reflecting significant growth in both infrastructure and platform services. Strong revenue growth in Google Workspace was driven by growth in both seats and average revenue per seat. Google Cloud had an operating loss of $699 million. As to our other bets, for the third quarter, revenues were $209 million and the operating loss was $1.6 billion. Let me close with some comments on our outlook. Our results in the third quarter reflect an increased headwind from foreign exchange, given the ongoing strengthening of the US dollar versus last year. Excluding the revenue benefit from hedging, there was a 6-point headwind year on year, or 5 points with the hedge benefit, compared with a slight tailwind in the third quarter of 2021. Looking to the fourth quarter, based on strengthening of the US dollar quarter to date, we expect an even larger headwind from foreign exchange. In addition, as we have previously said, the impact of foreign exchange is greater on operating income than it is on revenues, given that our expense base is weighted more toward the US, with most of our R&D efforts located here. Turning to our segment results, within the Google Services segment, search and other revenues had healthy fundamental growth in the third quarter, which was affected by the impact of currency movements. As I already noted, the largest driver of the deceleration in year-on-year growth of search compared with 3Q21 was lapping the outsized growth in 2021. The sequential deceleration in the year-on-year growth of search in the third quarter versus the second quarter was also driven by lapping, with an additional headwind from pullback in advertiser spend in some areas. In YouTube and Network, the sequential deceleration of year-on-year growth in the third quarter versus the second quarter primarily reflects further pullbacks in advertiser spend. In the fourth quarter, the very strong revenue performance last year will continue to create tough comps that will weigh on the year-on-year growth rates of advertising revenues. Within other revenues, we expect an ongoing headwind from the slowdown in buyer spend on Google Play due to a number of factors, including lower levels of user engagement in gaming that impacted results in the second and third quarters. As Philip mentioned, among other factors, this shift in user behavior was also a headwind to advertising revenues, with lower revenues from app promo spend on YouTube, Network, and Play ads in search and other. Turning to Google Cloud, our results reflect momentum across GCP and Workspace. Customers globally are adopting our products and services to digitally transform their businesses. We are excited about the opportunity, given that businesses and governments are still in the early days of public cloud adoption, and we continue to invest accordingly. We remain focused on the longer-term path to profitability. In terms of profitability, we have an effort underway to ensure we redeploy investments against our most compelling opportunities. As we noted on our second quarter call, Our actions to slow the pace of hiring will become more apparent in 2023. With respect to Alphabet headcount, we added 12,765 people in the third quarter, including more than 2,600 of those joining Google Cloud as part of our acquisition of Mandiant. As in prior quarters, the majority of hires were for technical roles. In the fourth quarter, we expect headcount additions will slow to less than half the number added in Q3. Within this slower headcount growth next year, we will continue hiring for critical roles, particularly focused on top engineering and technical talent. Turning to CapEx, we continue to make significant investments in technical infrastructure, with servers as the largest component. Thank you. Sundar, Philip, and I will now take your questions.
As a reminder, to ask a question, you will need to press star 11 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Our first question comes from the line of Eric Sheridan of Goldman Sachs. Your question, please.
Thank you very much. Maybe two questions, if I can. So, first, I think what investors are very curious about is how much this change in terms of aligning investment against your priorities is a reflection of what you expect to happen over the next 6 to 12 months in the broader macro environment versus a longer-term perspective of maybe maximizing for productivity and efficiency. We'd love to get your philosophy on that. And then, Philip, a lot of comments in there about YouTube and the potential for growth going forward. Can you go a little bit deeper on what you're seeing in terms of both the opportunity set to drive revenue and turn a possible headwind to a tailwind with respect to shorts and connected TV over the medium to long term? Thanks so much.
Thanks. Look, I would say it's a combination. Obviously, as a company over time, we've had periods of extraordinary growth, and then there are periods where I viewed it as a moment where you take the time to optimize the company to make sure we are set up for the next decade of growth ahead. I view this as one of those moments. It gives us a chance to make sure we are, with clarity, identifying what are the most important areas and making sure we are directing our incremental investments towards those, and as well as where we can realign. So I view this as an opportunity to do that, and also being responsive to the current macro environment we are seeing.
Yes, and from my side, Eric, in the third quarter, as I mentioned, there was a further pullback in spend by some advertisers across both brand and direct response. But overall, I feel YouTube remains in a really good position to continue to benefit from the streaming boom. In direct response, we think there's a lot of room to run to make really YouTube more shoppable, more actionable, from video action campaigns to product feeds, app campaigns, live commerce features. Advertisers are turning to YouTube to convert intent into action and really drive performance at scale. Product feeds are coming to Discovery ads soon, and recently expanded to Shorts. We're already seeing results. And in fact, on average, video action campaigns with product feeds saw an over 70% increase in conversions on Shorts versus those without. On the brand side, as I said earlier, eyeballs are moving away from linear TV, and we're helping brands move beyond tradition. To efficiently really achieve their reach and awareness goals. And obviously, you mentioned that as well. Connected TV is an important part of this strategy. When you think about it, YouTube is really the best place for advertisers to reach new consumers across multiple formats and screens, from Shorts to long form podcast music, all the way to CTV.
Thank you. Our next question comes from Brian Nowak of Morgan Stanley. Your question, please, Brian Nowak.
Thanks for taking my questions. I have two. The first one for Sundar or Ruth. Sundar, just to go back to the comment about earlier in the quarter becoming 20% more efficient. I thought tonight your comment on investing responsibly over the long term, about being responsive to the environment, is helpful. But if I look at sort of the Excel sheet, I think you'll have added about 51,000 new people to the company since the start of last year. can you give us some examples of internal KPIs or quantifiable analysis you're running just to ensure you're generating ROI for investors from all your hiring as you sort of run through these analyses? That's the first one. And the second one, Philip, just on shorts, are you seeing shorts lead to incremental time spent from those users, or is it more so you're seeing the time shift from other forms of YouTube over to shorts?
Brian, I think, look, I think we gave we've been clear that we are going to moderate our pace of hiring going into Q4 as well as 2023. I think, we are, seeing a lot of opportunities across a whole set of areas, and every time, talent is the most precious resource. So we are constantly working to make sure everyone we've brought in, is working on the most important things as a company, and particularly so. And that's a lot of what sharpening our focus has been about. We are reviewing projects, at all scales, pretty granularly, to make sure we have the right plans there, and based on that, the right resourcing and making course corrections. And this will be an ongoing thing. It is something we'll continue doing going into 23 as well.
Yes, and to the second part of the question, as we discussed before, we've always focused on building a great user and creator experience first, followed by increasing monetization over time. We continue to experience a slight headwind to revenues as Shorts viewership grew as a percentage of total YouTube watch time. And as I alluded to earlier, the initial progress on Shorts monetization has been encouraging, and we're focused on closing the monetization gap between Shorts and long-form content on YouTube over time. And more specifically, consumers are increasingly consuming short-form video. We're seeing this across multiple platforms, including YouTube. And as I said earlier, Shorts are being watched by 1.5 billion plus logged-in users every month.
Great. Thank you both.
Thank you. Our next question comes from the line of Doug Anmuth of JP Morgan. Your question, please, Doug Anmuth.
Thanks for taking the question. Ruth, you highlighted momentum in cloud and growth accelerated in 3Q. Are you seeing any changes in cloud demand as existing or potential customers perhaps rethink their priorities? And then how should we think about the pace of investments at cloud going forward? Do you still believe that you're in more catch-up mode, or should we expect a more stable rate of investment and greater profit improvement? Thanks.
Thanks for the question. Yes, we are pleased with the ongoing momentum. It's across a wide range of industries and geographies, and it really comes back to the team's focus on helping them solve unique business issues and innovate in new areas as they digitally transform. I think, more to your question, and we talked about this about last quarter, in some cases, certain customers are taking longer to decide, and some have committed to deals with shorter terms or smaller deal sizes, which we attribute to more challenging macro environments. Some are impacted due to reasons that are specific to their business. But overall, as you can see from the results here again, we're pleased with the momentum in cloud and do continue to be excited about the long-term opportunity. So that's why I made the comment that we do continue to invest meaningfully in this business. We're still focused very much so on the path to profitability and free cash flow strength here. But we are continuing to invest in the business. And this fits within Sundar's overall comments as we're looking at how we prioritize. And they're certainly making sure they're focused on every element within their business. But fundamentally, to the heart of your question, we're continuing to invest here.
Thank you.
Thank you. Our next question comes from the line of Michael Nathanson of MoffettNathanson. Your line is open, Michael Nathanson.
Thanks. Sundar, one for you and then one for you, Ruth. I want to ask you about TikTok, but not as it relates to YouTube, more about search. It looks like younger consumers are spending more time on TikTok searching product reviews, recommendations, advice. I'm interested in learning if you've seen any changes in your search behavior by demographics at Google. And then do you think search has to become more visual and less text-based going forward in order to maintain more relevance for younger users? So that's one. And then Ruth, can you just dig in a bit on the OpEx growth in Google services? You called out other cost of revenues being up 20%. It looks like as a percentage of revenues, it's nearly an all-time high. Can you talk a bit about how much of that cost base is fixed versus variable, and anything on outlook and what's driving kind of the spike this quarter, and maybe what we expect going forward there on the cost of revenues? Thanks.
Look, I think it's always important that we try and understand our user segments and their needs so that we can make sure the products are helpful and working for them. And we ourselves conduct thousands of studies a year to understand how user needs are evolving. And as part of it, there are some studies which obviously show people, particularly younger users, in certain categories, maybe fashion inspiration as an example, look for more visual ways to engage. And so these are all learnings we are constantly taking in, and we use it to improve search. And if you saw Search On, we had many explorations and product directions which move in that direction. So I think it's a healthy way of iterating and innovating to build the best products and services for our users.
And then in terms of your question regarding margins, two parts really. On other cost of revenues, the biggest driver of the year-on-year increase in other cost of revenues does continue to be data centers and other operations. The change really here this quarter in Q3, the second largest driver was hardware, and then CAC moved from its usual number 2 spot down to number 3. And there were really two key factors for the change in the rank order between hardware and CAC. Probably pretty self-evident, but just to spell them out, the year-on-year decline in YouTube ads revenues obviously muted the growth in CAC, and then the growth of Pixel phone sales due primarily to the launch of Pixel 6a drove that shift. What we're looking at overall, sort of to your broader question about profitability in Google services, is the overall pace of investment and how we're looking at how with the mix change and ongoing opportunities to drive revenue growth, how it flows through all the way to op inc growth. And so to Sundar's opening comments, and as we've been talking about, some of the margin upside last year was due to timing issues with the very strong growth of revenues, and there was a lag in investments. And what we're focused on here is how do we continue to manage on a go-forward basis to deliver durable long-term results.
Thank you.
Thank you. Our next question comes from the line of Ross Sandler of Barclays. Your question, please, Ross Sandler.
Hey, guys. I hate to beat the dead horse on the Google services margin, but Ruth, you just mentioned mix shift. I think that's a lot of what's going on here. And given the trajectory that you're seeing in search and in play, which we estimate are where most of the profit's coming from in that segment, versus some of those lower margin items, YouTube subscription, hardware, et cetera. Maybe you could help frame the next couple of years. Is this going to land below pre-pandemic, which I think was around where we are here at 32%? Could we see the 2Q20 low of 27% for Google services margin? Any help just framing where that might land would be helpful. Thank you.
Well, I'll, as I'm sure you would expect, leave the modeling to you, but there are two elements of it. And I think Sundar and Philip really talked about the first part, which is the ongoing opportunity we see with search, with YouTube, with some of the actions that we're taking, the opportunity with AI applied to both, the opportunity as we continue to build out monetization on YouTube Shorts in particular. So we're continuing to focus on both the numerator, the driver here, revenue, as well as the investments that we're making, and want to make sure, to Sundar's comments about sharpening our focus, that we are economizing, utilizing resources as effectively as possible. So, it is both the efforts we're taking around expense management and building for durable performance, as well as the efforts we're taking, which are in the investment line, but drive top line performance. I would say, we also contextualize it, and I tried to do that in response to Michael's questions. And we said this last year, we've noted it, that some of the margin upside last year was due to timing issues. And we had a very strong growth in revenues, a surge in revenues, and a lag in investments that we said was a timing difference. And you are seeing some of that here. But to the main point, we're looking at both what we can do to continue to support long-term revenue growth, but while doing so, being mindful of the pace of investment. I'll leave the modeling to you.
Thank you. Our next question comes from Brent Thiel of Jefferies. Your line is open, Brent Thiel.
Ruth, on the pullback by some advertisers, is there a common thread that you can draw on common, underlying characteristics that are pulling back versus those that are continuing to lean forward? Can you talk about that dynamic and what you're seeing?
Why don't I start and then I'll pass it to Philip for a bit more color potentially, because I want to make sure that one of the comments that we made in the opening comments was very clear, which was the year-on-year story in ads was really lapping the very strong third quarter. And so to get to your question, you're really talking about sequential decline on year-on-year growth. And I think what's notable, in search, we had really healthy growth in Q3, excluding the impact of foreign exchange. The sequential deceleration in search in the third quarter versus the second quarter was again primarily driven by lapping. And just I want to make sure that that was clear. There was some pullback from advertiser spend in some areas. Philip noted that in opening comments. And then in YouTube and network, the sequential deceleration of year-on-year growth in both the second quarter and the third quarter versus the second quarter was really further pullbacks in advertiser spend.
Yeah, that's exactly right. And as I said earlier, in search and other ads revenues, while lapping the outsized performance was the largest factor in Q3, we did see some advertiser pullback in certain areas in search ads. And I think the example I called out was in financial services, in the areas of insurance, loan, mortgage, crypto subcategories. And we also noted a pullback in spend by some advertisers in YouTube and network. And these pullbacks in spend increased in the third quarter. And we also noted lower revenues from app promo spend on YouTube and network.
Thank you. Our next question comes from Mark Mahaney of Evercore ISI. Please go ahead, Mark Mahaney. Apologies. We'll need to go to the next question that comes from Maria Ripps. Maria Ripps of Canaccord, your line is open. Please stand by.
Holding to see if there are technical difficulties. Thank you all. And if the operator could keep us posted here, maybe even try.
Yes, ma'am.
Yes. Thank you.
Thank you so much for your patience. Again, our next question comes from Mark Mahaney of Evercore ISI. Mark Mahaney, please go ahead.
Just checking. Can you hear me?
Thank you.
Hello?
We can hear you, Mark. Thank you.
Great. Thanks, Ruth. Okay, two questions, please. One, Sundar, you've been with the company for a long time. You've seen these cycles before. Can you put any context as to as economic conditions wax and wane, the impact that has on Google? Like, how does this environment look to you versus prior cycles that the company has managed through? And then, Ruth, on the cost side, I understand the comments. We understand the comments about the headcount ads and what you plan to do in the fourth quarter. But could you talk about non-headcount related costs and the opportunity you see or the need you see for managing those down? And do you see that there are significant opportunities to do that as well? So again, non-headcount costs. Thank you very much.
Thanks, Mark. Well, a couple things. I think compared to the past, I think going through this, there is, as we've said before, there is more uncertainty as we go through. We definitely see indicators on both sides, so that makes it a bit more unique. Number two, I would say the strength of search, both as a product for users as well as for advertisers, in terms of delivering ROI through a tough time in the ad market. I think is great to see. Third, just like when we went through it last time, it ahead of us was a decade of mobile and the opportunities it brought. And to me, sitting now, looking at all the work that's going on in AI, we've been an AI first company for the past 7 years and all the investments, and it looks like a big opportunity ahead. So keeping all that in mind, focused on the long term, using this moment to be disciplined and prioritize and focus, I think will set us up well for the next decade ahead.
And then in terms of your second question, I think the core to Sundar's comment is with the rapid pace of growth that we've experienced, we see opportunities to focus more. And that drives opportunities to redeploy amazing talent we have into the highest priority efforts that we have, and to be as effective and efficient as possible. There are obviously, to your question, non-payroll associated expenses that also then attach. And so, an operating environment like this adds urgency to prioritization. We want to make sure we're using all resources as effectively and efficiently as possible. At the same time, as we've tried to be very clear, there are very exciting areas that we will continue to invest in. And so part of this is, resource optimization, constraint optimization, however you want to describe it. We want to free up where we can to ensure we have capacity to invest as needed in opportunities that deliver these durable long-term results that we've talked about. And so we're trying to be, smart about redeploying where we can, finding efficiencies where we can, while still investing for long-term growth.
Thank you, Ruth. Thank you, Sundar.
Thank you. Our next question comes from the line of Maria Ripps of Canaccord. Maria Ripps, your line is open.
Great. Thanks so much for taking my questions. First, you talked about strength in retail and travel. Can you maybe talk about automotive advertising and whether you're seeing any signs of recovery as supply has been normalizing? And if so, how might this rebound sort of compare to prior cycles? And then secondly, just on Performance Max, it seems like it continues to do pretty well here. So based on your conversations with advertisers, are there any specific features or functionality that you would call out as significant drivers of the product's attractiveness? And is there any color you can add maybe around relative ROI of PMax?
Yes. So there's really no additional color. Thank you very much for your question, but there's really no additional color on other verticals apart from the ones I mentioned already that I think we should share here at this moment. On the Performance Max side, which we touched on earlier and in prior quarters, and just as a little reminder, it's our fully automated Google Ads campaign type with the most channel and inventory coverage that really helps advertisers deliver a better ROI. And we've been listening to feedback from advertisers and have continued to roll out more features since its initial launch to increase transparency and help advertisers steer the automation more effectively. And there are more feature updates to come. In July, we launched a number of new settings, including seasonality setting that lets marketers make quite atypical adjustments for seasonal campaign bidding, and an optimization score setting that gives an indicator for performance improvement and gives recommendations for better results. So all in all, we're excited about what's ahead for PMax, the further simplification of our products in general, and frankly, the value we can keep driving for businesses of all sizes, especially when they need it most.
Great. Thanks so much for the call.
Thank you. Our next question comes from Justin Post of Bank of America. Justin Post, your line.
Great, thanks. I guess a follow-up about artificial intelligence. First, CapEx is up 31% year over year. Can you talk about a little bit what's driving that, and can that be pulled back a bit? Is that cloud or really building out the AI capabilities? And then maybe Sundar, as you think about search where it is today, and you have much better visibility on AI capabilities than we do, how could some of those capabilities be mixed into search, and when would we as investors maybe see some of those benefits? Thank you.
Thanks, Justin. Look, I mean, I think on the AI front, we are still in very early innings. We've been very good about as our research teams are making progress, bringing it into search. So pretty much the transformer-based models, including BERT and MUM, are in search now. So it's driven a massive improvement in search quality, and helped us extend the lead in quality over other products. We are definitely using it to make it multimodal, and I think going back to some of the earlier questions about making sure search is visual, things like Google Lens, bringing visual search into being able to point your phone at things and ask questions, all that really helps set up search well for the future of where computing is headed. But AI not only affects search, it affects all our products. It makes YouTube better, ads better, and through cloud, we are bringing it to other companies as well. So we'll keep that in mind, and maybe so we'll keep that in mind. Thanks.
And then maybe Ruth, on the CapEx, where's most of that going to, and how do you think about that going forward?
The majority of CapEx does continue to be for our technical infrastructure. And as we've talked about on prior calls, servers really has been the largest driver of the investment dollars. The technical infrastructure team has consistently focused on levers to improve utilization and efficiency, and they continue to do so. We are, investing, to Sundar's comments, and building out the compute in support of all that we're doing with our AI teams, and are excited about that. And, obviously you had seen some more activity earlier in the year regarding real estate. We feel good about where we are. We're continuing to fit out our offices, et cetera, for utilization in this new return to hybrid work environment. But we're trying to make sure that we're doing that at a appropriate measured pace. And that's really it. Thank you very much.
Thank you, Ruth. Thank you, Sundar.
Thank you. That concludes our Q&A session. I'd like to turn the conference back to Jim Friedland for closing remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2022 call. Thank you, and have a good evening.
This concludes